What's going on, guys? Today I'm going to teach you my exact strategy to make $10,000 a month, even more day trading. All right. So I'm going to go over a few stuff before we get into the actual strategy, because there is other stuff that are important before trading that you need to know in order to become profitable. So we're going to start with fundamentals. All right. So we have psychology. The problem with a lot of people when they go into the market is they're trying and going into this mental state that they want to make money. How am I going to make money today? It's like every other job that you have, or like a 9 to 5 you have. You go work, do your best, and you get paid off of what you do, right? You don't go thinking, how do I make money, right? It's like being a waiter. If you go work and be like, how am I going to make money? You're going in with a bad attitude already. You're gonna go in and give them the best service that you have in order for them to give you money, Right? You want to leave the emotion society. You want to put all market strategy to what is most probable where market is going to go, right? You have to understand why market is moving into that direction. You have to find the reversals and understand where price action wants to go. Once you remove the thought of making money, you're gonna be golden. You're no longer gonna be thinking. You're no longer gonna be thinking bad thoughts of I'm gonna make money. Because if you go into that mental state, you're already in the way of making bad decisions. All right. So now let's move into. Sorry, I have a mess. All right. Let's move into the actual strategies. All right. So, strategies. We have our daily bias and our key levels. These are aligned. Why? Because this is where we find what where market wants to head off to. Are we going to head out to buy side liquidity or sell side liquidity, right? And then once you wait for one of these keys levels to get hit, you want to go into a lower time frame to look for a reversal or lower time frame continuation. And your end is going to be end execution and exit, obviously. Right? So what is this strategy based off, right? So our strategy is based off 1 hour highs and lows, 1 hour highs and lows, 4 hour highs and lows, session highs and lows, data highs and lows, right? Why are these important, do you ask? Okay, so what I like to see every time the market opens at 9:30 a.m. or 8:30 a.m., depends on where you are in the world. So every time market opens, we have institutions that are going to manipulate to sell side or buy side liquidity in order to continue into a reversal, right? Why is that important? Because it taps in those sells and buys orders into the market, and it's gonna make people either lose money or make money, and you want to work with them, right? So when one of those key levels get tapped in, what do? You wait, jump into a lower time frame confirmation. You jump into a 5 minute, 3 minute, 2 minute, or 1 minute, or if you want a 30-second if you have nothing, right? And what do? You want to wait for a break of structure, an inverse fair value gap, a CISD, and enter, and then exit, right? What do you want to enter? You want to enter as soon as these closes, and you exit at recent lows or highs of the market, right? Here's a quick example. Oh, this is so crooked. All right, so we have these buys right here, right? This buy side liquidity, right? What do? We tapped into this buy side liquidity. We have a break of structure, and then we have a retest of the break of structure. We enter over that. Put your stop loss to the swing highs. What do you target? Recent lows. It's pretty simple, right? All right. So now let's jump into actual examples of actual examples of the market today. So I'm gonna show you guys a trade I took today. Today was a little choppy, right? So we have we had all-time highs all the way up here, right? You have all-time highs, and I've been bullish this whole week because we always came back and touched this up to all-time highs, right? Today I was still pretty bullish because we were all the way up here, as you can see, 8 a.m. right here. And what I want to see, so I wanted to see one of these key levels to get tapped into. We had these London lows and these Asia lows, and we also had a 15-minute order block, right? So let's see, I'm gonna mark out 8:30 open for you guys. All right, so market opened right here. Market open. What was I waiting for? For one of these key levels to get tapped into. All right, so boom, we had this key level tapped into. We had London lows tapped into. We didn't get nothing, so I obviously waited to see if we wanted to get these Asia lows, right? What happened? We got these Asia lows. We subbed that liquidity, and we respected this order block, right? What did I do? I jumped to a lower time frame. Let's see if we'll have a 1 minute, right? If there's no 1 minute entry, what do? I jump into a 30-second, right? Yeah, this 30-second right here. I'm gonna delete this so you guys can see. All right, so we have this 30-second. 30-second. We have this fair value gap right here that was being disrespected. What did I do? I enter off of that gap, right? Stop loss at the swing lows. And where do we target? What did I say? So we target at recent highs. You could target these, but I was going with, I always like to get a piece of the pie instead of the whole pie, you know? As long as I get one piece, I'm good. So what happened, right? Took out, boom, swept, and then the market continued down lower. You can see, perfect entry, perfect exit, right? You could also enter off a CISD, which is a higher entry, which is all the way up here. What is a CISD? So a CISD is when we have this structure of ups and down candles, right? And when we have one candle close above a past high, making it a change in state of delivery, right? So you can see in this example right here, right? This candle closed above these highs, right? So as you can see, we had this high right here. This candle didn't close it, but this candle did, right? What would you do? You would enter off of this candle right here. Stop loss. You could put your stop loss here, or if you want, you could put it all the way down here. But if you're expecting that CISD to hold, you would expect price to hold this, right? What do you target again? You'd easily target recent highs. Boom. And what is that? That's a what? That's a 2. That's a 2. That's a 1 and 2 risk reward. Wow. See how easy it is? All right, let me delete all these. Now, let's see. Break of structure. Break of structure is kind of aligned with CIZ. It's almost the same thing, but the only thing is this would be a break of structure right here, right? So we have this candle right here close below these lows, right? All right, so we broke structure. What do you want to see now? You would want and wait for a confirmation, right? Of that, for a retest of that break structure, right? So we did this, we retested and broke structure, right? We would enter off of these candles right here, right? Oh shoot. Enter off of these candles right here. Stop loss at stop loss at these highs and target recent lows, right? Boom, boom, boom. That's what we did. Oh, look, right now, what do we have? We had a retest of this order block down here, right? We had an inverse fair value gap right here. We enter off of this candle right here. Stop loss at the swing lows. Target what? Recent highs and lows of the market, right? Here, live action for you guys, right? You could also just target here, just if you just want a piece of the pie. Which is what I would do, because it's about a 1-on-1. Alright? It's pretty simple, alright? So remember, every time you go into the market thinking you're gonna make money, you're always gonna make bad decisions. You always have to go in and have and think what is most probable. Are you most probable to go to these highs? Let's see, are we most probable to go to all-time highs, these highs, or are we most probable to go to these lows before we continue higher, you know? That's what we have to look for. when we're coming into the market. All right, let's see. I'm trying to find another example. Right here's another good example. Let's see if I can find it, because okay, right here. This is for my continuation model, right? So we have market opened at, let me mark it out for you guys. Market opened and boom, market open 8:30, right? And then what do we have to the left side? We have these hourly highs and all-time highs, right? For this day, right? Ignore this. We're on this day right now, right? So what do we have? Market open, and we have, you could enter two ways, right? There's two ways you could have entered. We have immediately displacement through these highs, right? Making a CISD, right? As you can see, CISD. Making a CISD, right? You could have entered off of that candle right here and put your stop loss at these swing lows, right? And what are we going to target? These hourly highs or these all-time highs, right? See? Boom. All right. And if you didn't do that, you could have used my model, which is MEC model. So what is that? What is that? What do you mean? What is that? All right. So we have this 5 minute, right? We have this 5 minute gap created, and then we have we have a retracement into this gap, and then what do? Right? We jump into a lower time frame. Lower time frame. I have to find it again. Sorry, guys. All right, it's right here. So we jump into a lower time frame for what? To look for an inverse gap, which is what I use. I like to trade inverses, right? So we have this inverse of a gap. Let's delete it so you guys can see. So we have this gap created right here. And what do? We inverse this gap, enter off of this candle right here, because this is where it closed above the gap. Stop loss at these lows, right? Why? Because if I'm bullish, I'm expecting this low to get respected, or this gap to get respected in order to continue higher. And if we run through that, we're going to continue lower. And why would I still want to be in that trade, you know? All right, so enter out this candle. What I say? You target what? Past highs of the market. So we have these highs that you could target, or you could hold to all-time highs, right? Boom. Pretty simple. All right. See? Oh, look, we got break even on this. Whatever. I'm really sick. My bad, guys. And that's how you make $10,000 a month day trading NASDAQ and S&P 500. Pretty simple strategies, right? So if you guys need any more help, you could always let me know. I will make more videos on the ICT for dummies. But this is just a quick rundown of my strategy. Peace out, my little gremlins.